This is Josh Jalisnki, the financial quarterback. Don't touch that dial. Hey, everybody, it's Josh Jalisnki, the financial quarterback. Taxes are one of the biggest headaches for small businesses, but getting your taxes right is absolutely critical. Mishandle your taxes and you could face stiff penalties, interest, and a lot of stress. But do taxes well and you can maximize your deductions and improve your cash flow.
I've been looking forward to this episode because I have a small business, and I wanted to know from your perspective, what is the number one thing small business owners need to keep in mind when they're doing their taxes?
Number one, the government gives you incentives to spend money on your business, but keep good records. Hire a good accountant, get a bookkeeper. Those are some of my initial tips.
I don't have a bookkeeper, but I've been thinking about it, and, I signed up for this company that, ended up screwing me.
Yeah, what happened with the company that was screwing you?
They ended up doing my taxes, and I had some issues with my taxes, and they were part of my QuickBooks, and I look at my QuickBooks, and there's about 15 different names of people I'd never met before. It just was like, what is going on? I felt like there was no communication between what was happening and what I was told.
Well, I'm looking on their website. It looks cool what they're promising. It seems like they're probably using AI and automations to give you almost like a checklist.
Yes.
Paychex is doing stuff like this, which is a scam in my opinion. They're charging, 10,000 plus for various things that are free. Business owners often get suckered into stuff. And in reality, I think you need a real person to help you. You need an accountant, you need a bookkeeper, you need a financial advisor, you need a lawyer. And a lot of these programs are trying to give you a menu to protect you, but in reality, then you're the one on the hook for everything. So I think establishing your team is critical.
All of your people, when you started your small business, they were local, or were they references, or how did you meet your team?
I met the one guy at a charity dinner. I just stayed with him and he grew with me and I grew with him. So having a real person is critical. I also think sometimes you get what you pay for. People are trying to get some type of AI solution software, but you really need a person who cares about you and picks up the phone.
All right. I wanted to ask though then about just taxes in general. Last year, I needed to find someone local, and what's the right price to pay? Is it the person? Is it what they're offering? Is it what size your business is?
It depends on the revenue, right?
Yeah.
I viewed this was very integral. If you have $1 million of revenue, to pay somebody 50 grand a year or 30 grand a year or 20 grand. But if you have, let's say, 100 grand of revenue, to pay them 6-7% of your income, it seems a little high. So it depends on the income that the company is generating.
Yeah.
So you're hiring a bookkeeper and accountant to save you money on taxes. But if you hire somebody and then they get you all this money back in your taxes and then you get audited, then you got to hire somebody else to deal with the audit. And that's more money. It's funny. I used to be under the presumption of getting the cheapest person to get your books, because whatever they save you, you can't really get. Then I was of the opinion, hire the most expensive, most valuable. Now I really think it's an individualized approach. If you keep good records, then you don't need to pay a lot. But if you don't keep good records, it's probably better to hire a good bookkeeper. And then you bring the accountant those things.
Yeah.
I wouldn't pay more than 5% of your revenue for accounting. I've hired high-end accounting firms and I've not seen yet a corresponding benefit.
Yeah.
Maybe if you're being audited, maybe if you have a tax attorney question. But if you're a business owner, what are you going to write off? Your home office? Think about this. Let's talk to you. What do you write off?
Don't do my office. I was advised not to.
Yeah, why though? The old adage was, you shouldn't write off your home office because then you have a higher likelihood of audit. Well, what are you doing wrong?
Yeah, that's why I don't do it. That's what I was told.
If you're going to keep good records. Now, if you're going to be sloppy, no. See, to me, the problem with most small business owners is they don't have a good bookkeeper. So then it makes the accountant do more work, and the accountant will often do the wrong work, like you said you had one experience where they were putting the wrong stuff, because the bookkeeping isn't precise. You really got to segregate the bookkeeping from the doing the return, from the financial strategy, from the tax strategy. Because you might be saying, I'm paying $7,000. You might think they're doing all four things. And they probably aren't. What they probably mean is, you'll get a couple meetings with us. We'll But are they really going to go in and audit your receipts? Are they really getting that granular?
It does start to creep up at the end of the year when you start to think about taxes. And it's just I've gone into QuickBooks and I do it myself every month. But at the same time, it's I'm only going off of what I'm reading and what I'm using my best judgment on.
I also think it's a value of How much time are you going to be involved? I mean, I have to always follow up with my people. Like, it's worth it to pay more if you never have to follow up.
Yeah, I mean, you know it better than anyone. It's building that trust, right?
No, exactly. So first, let's talk about different types of businesses. You can be a sole proprietor. I generally think if you have a sole proprietorship, it's not the most intelligent thing. You should be an LLC or an S Corp if you are going around as a sole proprietor, because you have a ton of liability, not keeping your personal separate from your business pocket. Then we have partnerships, corporations, and cooperatives. The two biggest things that most small businesses do today is an LLC or an S Corp. So at the very least, you should set up an LLC. All businesses need to pay their income tax. This is similar to how individuals pay income taxes, but it's usually based on your business's net income, which is your business's total revenue minus your expenses. I know I, as a small business owner, I think a lot of people tend to equate revenue with income. Maybe it's a confidence thing, like, oh, I'm making this much. But what are you really bringing home? What is the net net? There was a book by Michael Michalowicz. It's called Profit First. And the idea was to structure your business in such a way that you're bringing home 30, 40% of the revenue day one. And so when you begin with this profit, you're going to have a healthier business. A lot of small business owners will get taken advantage of. Employees will always ask for a raise. And you love people. You want to serve your people who are taking care of you. But a lot of small businesses fail because the business owner is not seeing the business as an organism separate from themselves, right? So a business owner will often equate the income with profit, and they're two different things. Because you got to think of, well, how are you going to take care of your employees long term? You need a lot of cash, and you have to think of what is the best interest for your employees long term. It's you being a viable business. It's you having money in the bank so you can make payroll every week without worrying about it. A lot of businesses, they shut down unexpectedly. Remember that gym owner we rented to? Fastest growing gym in the country. They were growing, and all of a sudden, boom, they had to fold. Or they sold for a number they didn't want to, or something, what happened, but they're not around anymore. And the idea was they probably were spending so much on building that they didn't save. I would say easily, to run a successful business, $1 million cash in the bank. Because you got to think of, what if your payroll grows? What if your payroll's, $500,000 a year? That could be gone in a year if you have one bad year. Because then you got taxes. This is what happens with small business owners. They don't do forecasting strong enough. Something happens, then boom, they get wiped out. The next tax, we talked about income tax. Let's talk about self-employment tax. Basically, it's your contribution to Social Security and Medicare. If you work for yourself, you are responsible for both the employee and the employer portions, which can be a bit of a shock if you're used to having those deducted from your paycheck. So that was a big one. I remember the first year we made $100,000. I had to pay like $15,000 in Social Security Medicare tax. And that was in addition to income tax. And I remember I was so excited because I had $27,000 in the bank that year, Like that was like, oh, I had arrived because I could finally have a sufficient emergency fund for like 3 months of expenses. And then all of a sudden, bam, the 27 went down another $15,000 because my new accountant at the time said, oh, you didn't pay your self-employment tax.
So do you have like a recommendation for how much you should be putting away? You have to do it yourself?
Yeah, you can have your payroll company deducted in advance. So I would probably recommend that. And then you have payroll taxes. If you have employees, you'll be responsible for withholding income taxes from their pay. You'll also need to pay your portion of Social Security and Medicare taxes, and possibly unemployment taxes, depending on your state. This is also where, if you're running a small business, it's critical to explain to your employees like, hey, you think you're asking for a $5,000 raise, but in reality, you're asking for like a 10, because I got to pay Social Security, I got to pay Medicare, I got to pay health insurance, I got to pay 401k. It's like, you got to realize your employees do not think like a business owner. So they're like, what's a 3% raise? Well, 3% becomes like 8%. And then, being a small business is not easy. You have all these taxes that the average person doesn't have to pay. Then you have sales tax. If you're selling goods or services, you may need to collect sales tax from your customers, depending on your location and what you're selling. Different states have different rules on what's taxable, and some services are subject to tax while others are not. Then we have property taxes. If your business owns property, whether it's office space, a storefront, or equipment, you need to pay property taxes to your local government.
What are your thoughts on people who, are starting these online businesses or remote businesses so they don't have to pay the property taxes on an office building?
Well, that's a great benefit of the new economy, right? Zoom, all of these technologies. You don't need brick and mortar like you used to. And now there are places like Regis, where if you need a little room for $350 a month, where you just want to get out of the house and not do meetings with your kids yelling at you or picking your nose, you could be a Regis customer. So how do you file taxes as a small business? The filing process looks a little different based on your business structure. Many small businesses need to get an EIN, or Employer Identification Number. Some people call it a TIN. Sole proprietors with no employees may not need an EIN. They may just use their Social Security. However, they might still want to get one in case they want to hire employees in the future. If you're a sole proprietor or freelancer, you'll typically file your taxes on your personal tax return. You'll report your business income and expenses on Schedule C of your Form 1040. This will determine your business's net income, which is then taxed at your personal income tax rate. You'll also report self-employment tax on Schedule SE. If you're a partnership, you will file an informational return, which is Form 1065, to report your business's profits and losses. Then the individual partners report their share of the income on their personal returns using Schedule K1 to track their portion of the business's earnings. LLCs are a bit flexible. They can be taxed like a sole proprietorship on your Schedule C, a partnership, or a corporation. If you have an LLC and you're the sole owner, you'll file your taxes like a sole proprietorship. If you have multiple owners, you'll file it like a partnership. Most LLCs are considered pass-through entities, meaning your profits minus your losses pass through to the owner's personal tax return. Corporations are taxed as separate entities. I always found this interesting where Mitt Romney got flack for saying like corporations are people. Do you remember this? It was like a big thing. Oh, corporations are people. And I was saying that's from somebody who doesn't know taxes. They don't know businesses. They never owned a business. The reason corporations are taxed as separate entities is so the corporation could still go bankrupt if corporations fail, and the small business owner, which is taking a lot of risk with their money, loses only their corporate money, not their personal money. So this whole corporations are people, it means they're sort of taxed as a separate person. It's a separate entity from a tax and legal jurisdiction. No one would ever want to start a business if they knew that, hey, all of their profits, all of their risk would never benefit them and they would have unlimited liability. You would see bigger business thrive because they would be the only ones that could handle the risks of running a business. This means that they can file their own tax return using Form 1120. If you run a corporation, you'll need to pay taxes on your business income. And if you're a shareholder, you may also have to pay taxes on any dividends you receive. That's why most small businesses that want to be a corporation use an S corporation status, not a C, so you avoid double taxation. But that comes with its own set of rules. However, some people have converted to a C corp lately in light of the Trump tax cuts because they want their corporate taxes to be taxed a little differently. I've not seen that really benefits many people to go from an S corp to a C corp, but it may if they, lower the taxes to be significant on C corps. The S corps, with some of the benefits of the Trump tax code, like the pass-through deductions, still are appealing to most people. So let's talk about deductions next and what deductions to look out for. A lot of business expenses are deductible. In fact, any business expense is generally deductible, as long as you document it, meaning you can subtract them from your revenue to lower your taxable income.
Are there any specific business expenses that you look out for in your own business?
Everything. You could do mileage, do home office deduction, buying a printer. You could look at Section 199 deductions. You could even think about, if you own a business, buy a building so you don't have to pay rent. And then you have solar deductions if you buy a building for your business. Software, anything necessary and ordinary to your business interaction. You just have to document what you're using it for, Documentation.
What does that documentation look like? Like if I was going to write off my microphone, what documentation would I need? Just like receipts or?
Your credit card receipt, your credit card statement. There's various methods of substantiating your business deductions, contemporaneous logs of mileage, etc. You got to keep good records. See, the problem now is receipts get worn down. So that's why I always like funneling old business expenses through a credit card, because, in an audit, you could get those statements. But like receipts, they're now in that paper that it disintegrates in so many years.
Yeah, it starts to fade. Yeah. I always get nervous, like if I go out for like a business meal or meeting with a client or something, and I don't save a receipt. So if I use it on a credit card, then that's less of an issue, because I feel like I've always been told like keep your receipts, but sometimes you just don't get a receipt or you forget.
Now you can take a picture of your receipt, scan it in. There are apps where you can use for your mileage, for vehicle expenses. Talking about vehicle expenses, if you use a car for business, you can deduct either the actual expenses, gas, insurance, repairs, or you can use the standard mileage rate to calculate your deduction. Then travel expenses. If you're constantly traveling for work, look into deducting your travel expenses. Or a business expense. To qualify as travel, it must be from the city or area in which you conduct business. You must also be away from your tax home for longer than a full workday. Types of deductible travel expenses include air, tolls, taxis, lodging, parking at the airport, all those things. Then you can deduct your home office. If you work from home, you may qualify for home office deduction. A lot of people don't do this because they think they're going to be audited. You might. It's funny. I believed that for years, but the home office deduction is critical for many people. Now, this is based on the percentage of your home that's used exclusively for business purposes. 1/8 of your home represents your home office. You can deduct 1/8 of your home-related expenses: energy, heat, light, electricity, etc. What about interest? If you have a small business loan, you can make interest payments on what you're borrowing from the lender. Those interest payments are usually tax deductible, so long as the loan is used to cover business expenses. The loan mustn't be from a friend or family member. The loan must be through a traditional lender. Bad debt. If you've ever lent money to an employee or vendor without receiving it back, you can claim that as bad debt. IRS defines bad debt as a loss from the worthlessness of a debt that was either created or acquired in a trade or business or closely related to your trade or business when it became partly to totally worthless. Examples of bad debt include loans to clients, suppliers, distributors, and employees, credit sales to customers, or business loan guarantees. Depreciation. If your business owns big ticket items like equipment, copiers, or property, you can write off a portion of the cost each year through something called depreciation. This spreads out the expense over the life of the asset. Then health insurance. If you're self-employed, you can deduct premiums for your health insurance and long-term care insurance for yourself, your spouse, and your dependents. Business entertainment. If you need to entertain clients for meals and events, they're tax deductible. Note that most meal costs are only deductible up to 50%. Certain types of meals, such as a meal provided at an office party, are 100% deductible. Be sure to save your receipts and note the business purpose of the meal in order to maximize this deduction.
I mean, you just threw a holiday party, and I'm sure, like, what are the upsides of having this kind of deduction, like wanting to throw a party, wanting to spend money in your small business?
Shows clients you love them and care for them beyond just business.
Yeah.
But that's why it's 100% deductible, right? Like, you're not going to throw a big office party just for the sake of, taking you out to a meal.
No, that's why I think the deductions are interesting, because, I feel like when I first started a small business, it was like you're just looking for ways to kind of save, but like then you start to think about what these deductions actually mean to the business and growing and building, and these credits are, these deductions, but they're all towards building.
Yeah, I mean, we love treating our clients like a family, and they generally reciprocate with word of mouth. Then we're talking about tax credits. Different from deductions that reduce business taxable income, tax credits reduce taxes on a dollar-for-dollar basis. So a credit is worth more than a deduction. The Work Opportunity Tax Credit provides businesses that hire and employ members of certain targeted groups, like veterans and recipients of various forms of public assistance. Then there's the Employer-Provided Child Care Credit. Assists employers with the costs of providing or funding child care for employees. Then there's the Small Biz Healthcare Tax Credit. Reimburses employers for a portion of their costs in paying for health insurance premium for their employees. And then qualified small business payroll tax credit for increasing research activities. This provides a credit based on the company's research activities like R&D, research and development. How can you stay organized and out of tax trouble? You want to plan ahead to avoid facing penalties and avoiding stiff interest on those penalties. How do you do that? You keep good records. Use software like QuickBooks or FreshBooks. Hire an accountant to make sure everything's in order. Then you want to set aside money for taxes. A good rule of thumb is to set aside about 25 to 30% of your income. Then you want to make sure you pay estimated quarterly taxes. A lot of people forget this. And then they have to face penalties at the end of the year.
Yeah. Can we go into that? Because I paid one quarter and then I forgot to pay other quarters. But is there a penalty if you don't pay quarterly, or isn't just more you have to pay at the end of the year?
Well, if you don't pay your estimated quarterlies, you could be faced with penalties and interest as well. So it's a good rule of thumb to pay estimated quarterlies. Do you know what your estimated quarterlies are?
I have a general idea.
Well, you should pay them.
Well, I paid one this year and then I forgot the other two, the other three.
Yeah,
I guess if I pay one before the end of the year.
Yeah.
Really?
Yeah.
But I thought you paid taxes at the end of the year.
What do you think those 90,000 auditors are doing? I mean, the IRS is seeing that small business owners are a little sloppy. So who's it easy to go after? You and your sloppy small business tax accounting, or, Amazon's Jeff Bezos, where he's a whole team?
Yeah, people with lawyers.
Now, will they throw the book at you? I don't know.
Mm-hmm.
A good rule of thumb, so you don't get too paranoid about this, is you take your income. So let's say you made $100,000 last year. And let's say you owe $10,000 in estimated taxes. You would pay $2,500 for first quarter, $25 for second, $25 for third, $25 for fourth. And that would help you avoid penalties and interest. And you want to make sure you have a good CPA. Taxes for small business can get very complicated as you grow. Don't be afraid to work with a tax pro to help you navigate the process and maximize your deductions. Any of our listeners who want a free review with a CPA, I can get you 20 minutes on the calendar of my CPA for free. All you got to do is just call us at 888-988-JOSH.
All right, I want to do a game now. It's called Can You Deduct? I'm going to give you a situation, and you're going to tell me if you can deduct it as a small business. Your freelance graphic design business bought a new laptop for $2,000. The laptop is used 80% for business and 20% for personal Netflix binging. How much can you deduct off of it?
80%.
How come not the full 100%?
It'd be a tough thing to prove, but...
Can't you say, Netflix is, research purposes? Like, if you're looking at the graphics of shows or...
Yeah, if it's documented.
Well, what would documentation for that look like?
The log.
I'm in entertainment, so if I write off Netflix, for example, because, it's related...
I don't think they're auditing you for Netflix use.
Okay.
I mean, they could, I guess. Yeah. It's the general act of logging.
You run a bakery from home and renovated your kitchen for $20,000. The kitchen is used 60% for business. Which renovation expenses are deductible and at what percentage?
60%.
Just because that was what the business was using?
Generally speaking, yeah.
Your consulting business has both W-2 employees and 1099 contractors. You provide health insurance to W-2 employees and give holiday bonuses to everyone. Break down the tax implications of these benefits for both your business and the workers.
Well, the benefits could be increased morale. I mean, any of these would be deductible because you're providing health insurance. You're giving holiday bonuses, so it would all be deductible.
You are a social media influencer who just bought a ring light, a green screen, designer clothes for photos, a professional camera. Can you deduct it?
Yes.
But you have to prove that you're an influencer?
Yeah, but I would log your time and keep receipts. The designer clothes may not be a write-off unless they were deemed necessary for your business. That's like a gray area. Taxes are an inevitable part of running a business. The more you understand, the easier it will be to stay compliant and avoid any surprises. Knowing and understanding the ins and outs of deductions and credits can save you thousands. If it's too confusing or your business is doing so well that you don't have time to comfortably handle these important matters yourself, consider consulting a professional. Plus, the IRS allows fees charged by accountants and attorneys that are ordinary and necessary expenses directly related to operating your business to be deductible as a business expense.